Welcome to the Close More Deals podcast. I'm your host, Scott Dillingham. Today, I'm going to be talking to you about probation. We hear it a lot where a client will go and they'll get pre-approved and the lender says, no, you're on probation or you haven't been in your job long enough. And then the clients come to us and we get them approved. There's no secret. It's just that every lender has their own policies as to what they support and what they don't support. So there's a couple things, and I'll be diving into it today so you can understand how the program works. So first off, there is, when we're talking about no probation, but you've only been at your job for less than a year. A lot of banks require that 1 year. So if your client is going to them, right, and they're hearing, you're declined, you haven't been at your job long enough, right away it should trigger, okay, let's get them to Scott at LendCity. Let's do this because he's got the lenders that can move forward without this. So just know that is the thing. Now, pros and cons here and caveats, and I want to give you all the details so you have it all. If this is somebody that works 2 months here, 2 months there, 5 months there, 9 months, 2 months again, right? And we're just seeing an inconsistent job, like they can't hold a job, then that's a problem. Right? The lenders, they're not going to help with that. But if that's not the case, then yes, we've got the lenders. And now we'll talk about probation. So depending on the client's file, we have many lenders that even if you are on probation, they'll move forward and they don't care. Now, this is fantastic because everyone, usually, I'm going to say 9.5 out of 10, because I do see some roles at different jobs where it's high profile and you're being recruited, where they don't have any probation in it at all. So I have seen some of those, but it's rare. But anyways, if you've got the probation, it's not a problem depending on the lenders. So we use this program a lot, especially somebody moving from one town to another town, or somebody who feels like, this new employer or new job or career category, right? Maybe it's a completely different employment than what they've had before, where that they feel like they can get more, right? They move forward and they're on probation. So let us know, talk to us about it, because each case is unique and I don't want to promise you that, yeah, this is no problem. And then there is problems. So let's discuss it, but just know that you can do probation. The lenders that support the probation, we have them with CMHC and the alternative lenders and obviously private lenders. So we have it across the board. So these are A lenders I'm referring to. They're not banks, but they're called monoline lenders. And a monoline lender is just a lender, just a mortgage lender. They don't sell the banking products. They just have the mortgage balance. That's it. And they're more flexible on their rules because they kind of have to be if they want to grow, right? They only sell mortgages. So that's how it works high level. I hope this episode added value and it will help you to close more deals. Please share this with your other realtor friends if you found value, and looking forward to seeing you next week.